going to move ahead and quickly introduce what the next session looks like for all of you in presence over here. We are again and again focusing on inclusion, on responsibility, and somewhere around there is where our dialogue is going to begin. Now, before I begin with the next session, I do understand that we want to have conversations. I would request my members, my friends over here in this ballroom, to kindly take the conversations outside. And for the ones who are here for the session, to please be seated. This will help us begin with the next session more smoothly. Once again, I request all of my friends over here in the room to please take conversations outside the ballroom so that we can begin with this session. All right, introducing to all of you our topic. Before that, I would like to take this opportunity to thank our gracious partners, platinum partners, Truecaller, Zoho, and Scapia, AA Intelligence Partner, Ignosis, Beer Booth Partner, Cred. With that, we're going to open a dialogue on blended finance for Bharat, unlocking private capital for rural development. We have an extremely esteemed panel for this session, but before that, let me introduce to all of you our moderator who's going to handhold this entire session, Mr. Abhay Pareek, lead 4th Industrial Revolution for Agriculture World Economic Forum. Our speakers include Dr. Ajay Kumar Sood, Deputy Managing Director, NABARD, Mr. Saravanan Nattanmai, Partner, Premji Invest, Mr. Shyam Srinivasan, former MD, Federal Bank Operating Partner and Board Member, TVS Capital Funds. I want all of you to please put your hands together and welcome our moderator and panelists on the dais.
Good afternoon, everyone. Namaskar. Welcome to this session on blended finance for Bharat, unlocking private capital for rural development. It's great to have this audience here and a great panel of eminent personalities. I'm sure they are the masters of this topic, and we're going to learn too much from them. Just to start with the session, to give you a background, what we are talking about, the Bharat, as it's called, is about 63.6% of India's population that resides in rural areas. And we know most of this population is into agriculture, but strikingly, 54% of the population is from rural areas have shifted from agriculture to non-farm work, which includes construction, trade, and other. Now, as we see this shift happening, as we see this new change coming in, we are also realizing that the rural-urban divide between the expenditure is also reducing day by day. And also the rural unemployment is reducing. And this is giving us a great trend that rural economies are blooming. There is a great opportunity that has to be tapped. And as we move forward with that, we also got some data as we were doing this data crunching, that almost 12% of India's last 5 years of capital expenditure went to rural areas, which is nearly around 13.3 lakh crores, mostly into irrigation, infrastructure, and processing. So as we hear all these facts and data, we know India, rural India, as we heard or we have thought of, is not the same. The new rural India is going to be an economic powerhouse, and we are poised to do that, but it would require financing. It would require innovative financing. It would require new thoughts and new ideas. And we build on this. I would like to again introduce our panel. We have Mr. Shyam Srinivasan, Senior Advisor and Operating Partner from TVS Capital. We have Dr. Ajay Kumar Sood, Deputy Managing Director from NABARD. And we also have Mr. Saravanan Nattanmai from Premji Cap Invest. So not taking too much time ahead, maybe I can start with Dr. Sood with you. And why NABARD, and why to start with you, because you're at the forefront, and from childhood days we've heard NABARD gives rural finance, sir. So building on that, sir, I understand NABARD fund sanctioned almost 8.2 lakh crore of funds last in 2024 for rural infrastructure, sir. And building on these great initiatives, just wanted to understand what are those 2-3 key priority areas where you believe, as we talk about rural economy, rural infrastructure, where private sector capital can also be unlocked. And especially coming from the context of the funds that have been already invested by NABARD, I'm sure there is so much opportunity that have been created now. So where do you see next 10 years there could be 2-3 more sectors where private sector should look up to?
So good afternoon, everyone. So first of all, to put the things in perspective, this 8.2 lakh crore is a cumulative figure. It's not a one-year figure, basically. So we have been financing rural infrastructure since last 30 years. Maybe around 95, 96 we started this. And it is in various sectors like rural roads, irrigation, floods, drinking water, renewable energy, digital systems, veterinary hospitals, public health institutions. And there is a long list of 39 activities which we finance in coordination with the state governments, with the corporates and others. So basically what happens is, while we are financing these initiatives, it gives a very strong foundation for other players to chip in, particularly for the private players to come and seek opportunities in this. So going forward for the next, say, 10 to 15 years, so I would perceive that the 2-3 areas which would be important from the perspective of co-financing and from the perspective of the rural growth coming in. The first would be the renewable energy and climate resilient infrastructure. So we have been in this area for quite some time. We have been the direct access entity for Green Climate Fund. So there we have done certain projects, and the one project which I would like to name is the Tata Clean Tech solar rooftop solar program, which we have done under this. And recently we have come out with our own facility, which is called NABARD Green Lending Facility. So we are planning around 10,000 crores capital push through this facility every year. The basic aim of this facility is energy efficiency and sustainability projects. So we have done some projects sanctioned. This was started just last year only. So around 10,000 crores and going forward as per the requirement of the sectors. Then since the cost of the projects or cost of financing to the entities is also higher. So to cut the cost, we have come up with a green impact fund of 1,000 crores. So what the aim of this project is to cut the cost for the borrowers. So for example, there is a corporate who wants to borrow from us. So since it will be higher, so just to cut the cost, we have created this fund. Now the scope for private players coming up in these sectors would be climate action and sustainability, then solar microgrids will be one sector, biomass, then decentralized renewable systems. These are the sectors which we have financed also, and there is a scope for co-financing also. The other sector which I feel is important is the agri-logistics and value chain infrastructure. So we know that in agriculture and rural products, there is a lot of losses ranging from 5 to 15% due to the absence of the storage infrastructure, particularly the cold storage and warehouses. So we have also done our lot in financing these, but there is a huge scope for this. Now there is a project going on, world largest grain storage project, which is anchored by Ministry of Cooperation, and NABARD is also a partner in this. It is going on through the primary agricultural credit societies for creating a lot of storage infrastructure. So now we have come up with the one Agri Shore Fund, which is a 750 crore facility contributed by NABARD, 250 crores, then Ministry of Agriculture, 250 crores, and some private partners. So basically it is a category 2 AIF, so which will support certain agri and rural startups in priority areas. So I think these are some of the initiatives that can help, and this will certainly provide an entry point for private equity or the venture capitalists to chip in. So some assistance is available under these funds. And the third, I would say, third priority area that is going to be important is digital and financial infrastructure, which is going to be very, very important for creating the digital trails. So in terms of the initiatives that we have done is the PAX computerization. I think, I don't know how many people will be aware. So PAX are the primary agricultural credit societies. So there are 1 lakh of these societies at the ground level, which are so important from the financing of the rural farmers and rural entrepreneurs. So these societies, they are not computerized so for many of them. So we are taking up a project of, in collaboration with Ministry of Cooperation for computerizing 65,000 PACs. So it is almost under completion. And second most important thing we have done is the setting up of a shared services entity. So shared services entity is a private limited company that we have set up for supporting cooperatives for adopting technology, providing them operational support and other support services. So basically these are the weaker institutions. Because of their weaker financials, they are not able to, take the higher burden of financials for adopting technology and other services. So we are trying to convert the CapEx into OpEx in terms of this shared services entity. So this is also going to be a very, so what I mean to say is that this is a digital backbone that we have created in the rural areas. So this will definitely provide an opportunity for the private people to come and particularly for the private fintechs and data analytic firms and telecom companies. So we have a stall here on the ground floor where our shared services entity people are sitting. So those of the startups who are interested in this, they can just go there, have a discussion and find out which are the opportunities where they can chip in. Thank you.
Thank you, sir. And thank you for sharing these innovations, and shared service sounds great, so would love to learn more about it as we go into the discussion. Shyam, moving to you. We have heard from Dr. Sood about the areas, but apart from that, of course, we know consumption patterns are changing, the infrastructure is booming. These are the factors which drive capital, right? But any other 2-3 factors that come to your mind from a private sector perspective, could be regulations, policies, any other, that can drive that further flow of capital towards rural economy? And secondly, when we are talking flow of capital, just an add-on to that, what is the ROI that the private sector will be looking for when they're transferring this capital? Is it just impact or also financial return? So your views on that, please.
Thank you. Good afternoon. I think Dr. Sood spoke quite elaborately, explaining both from the lens of NABARD and actually how the DFI system is enabling finance to the last mile. I'll try and sort of abstract from that and talk about private capital. There's this famous saying, right, where this attention goes, energy flows. I think the same thing happens where there is an opportunity, resources flow. So I think in my mind, this whole rural economy, which you also pointed out, the bridge is narrowing, is very clearly now rural is becoming almost investment grade. And if it is investment grade, capital will start flowing. Right now, the form of capital, whether it's blended, how much is supported by some kind of catalytic capital, how much comes as grant, how much goes as private equity, or lending, that depends on the structure that you will create. But essentially, it's becoming quite clear if the India story has to play out, which all of us are quite wedded to. These are now no longer nice to do; it has to be done. Earlier, we used to see this as an obligation. Now, I think we have to see this as an opportunity. In fact, I remember in the bank's board, one of the directors who was quite passionate about this area always kept telling me, Shyam, move from boardrooms to barns. Right? Let's look at the opportunity on the ground. And I think it makes enormous sense. And that's how urban capital will start reaching rural entrepreneurs. And to make that happen, the famous 3 Ps, right? Partnerships, patient capital, and of course, proof of concept. I'd probably add one more, perseverance, because in India, everything exists, but getting it done is our massive challenge. Right? I think if you look at any textbook definition of how blended capital should go out and help elevate the opportunities in India, virtually every idea would there be a tick box, whether it's a formation of a DFI, whether it's a formation of capital form, whether it's the architecture that supports regulations that support. But unfortunately, when it happens either at the first mile or at the last mile where we find challenges. So I think the way forward, which is what everybody is trying, and I'm sure capital will make that happen, is how do these partnerships come where public guarantees help private capital to go out and support the process? What kind of first mile or first loss guarantees come in that can people run proof of concept and then that kind of gets scaled up? You asked the question about returns. It's very clear, right? I mean, any investor will seek returns. But I think in the new world, we realize that capital, particularly when it comes, you need a new ROI definition for rural investments. I don't believe you can go after the same. If it's a lending, you would have one kind of metric which says that this kind of yield, this kind of loss rates. If it's an investment, this kind of IRR and this kind of time horizons. If it's a investment like a venture capital, then they will want to know what kind of multiples at exit. So I do think the nature of capital will dictate what kind of returns, but you have to look at the larger picture of social return, not just commercial return. And in the bigger scheme of things, and I was at the bank till about a year back, IFC, when they came in for an investment as an investor in the bank's cap table, one of their biggest drivers of making that decision to invest in a bank was, of course, the performance of the bank, but even more importantly was in terms of what is their commitment to society and social causes. So I think capital is beginning to see much beyond just financial metrics. I mean, those are necessary, but not necessarily sufficient conditions. So I do think in the period ahead, for the reasons I pointed out, moving away from boardroom to barns, the whole story of how urban capital will work with rural entrepreneurs, trying to use the partnership model, trying to use the subvention or some kind of blends. And the last point I want to mention is I think we have to begin to understand that we have to de-risk the sector and not de-risk the dream. The India dream of Viksit Bharat and an inclusive India cannot be de-risked. So you can de-risk the sector because weather is playing a major part. I think Sood also spoke about climate related. So returns can get redefined, but I don't think you can stop or this horse has left the stable, right? We have to make sure that this dream is realized. So that's what I would say.
Thank you so much for concluding with that idea. The dream has to continue, and let's de-risk the sector and not the dream. So building on that, we've heard of the sector and the expectations. Now moving to you, Saravanan, where do you see now moving to how of things? Like how do you see within the blended finance, right? There are multiple models, multiple products. So which are those 2-3 ideas that you've seen working in other countries or you believe can work in India? Moving to more of how will we doing that, right? How will we do the blending of the 2 or 3 types of financing? So your views.
No, in my view, right, I think economics is strongly related to scale and volume, right? To the point, both Shyam and Dr. Sood mentioned, right? When there are opportunities, capital will eventually flow. And right now, the opportunities are kind of like concentrated in urban area, where if you set up a branch, an offtake for a particular volume in terms of INR crores or XYZ will happen. The moment you move from 1 to 2, 2 to 3, 4, and then rural, that kind of like is a little bit of a challenge today, right? That is where probably the risk capital from, as Dr. Sood mentioned, NABARD and other institutions go and set up the infrastructure there so that capital can slowly follow subsequently. It's a big risk capital from the government and the institutions like this which is enabling it. Having established that piece, right, now is a question of at what scale private capital can go there and make unit economic sense, right? If they go all out in a tier 4 or a rural area and pump in massive capital and branch network, if the offtake is relatively less, economics will kind of like suffer and the capital will dry down quickly. So that is why the blended finance plays a big role, right? So if you are offering a unit product, one level product in a a Bombay outskirt or a Chennai outskirt, you will see enough volume. But the moment you go to a tier 4 city, it will kind of like see substantially lower, utilization or capacity utilization term if I use, right? So when you're going to rural, you have to have like a multi-product kind of a strategy, right? I'm just giving an example, right? If you create certain sort of a distribution vehicle, which can take care of credit, insurance, and other XYZ products which are essential for the livelihood in and around that particular branch, right? That is where probably the blended finance construct also comes in. That improves reasonable, capacity utilization, but there are very few use cases that have kind of like successfully demonstrated that. But India has done several new first things, right? It's not difficult to do, but if you have a strong model and a good technology kind of a platform to deliver these multiple, financial services product at the last mile in a rural economy using the infrastructure and the digital footprints that Dr. Sood mentioned some time back, there could be a very, very interesting use case models. We are working as a fund, we are relatively long-term-ish compared to a typical private equity fund. I'm sure, some of you would be kind of like aware of as a fund. We are part of the foundation, right? Again, it is an intersection of what Shyam mentioned some time back. Philanthropy is taken care by the foundation, but we draw capital from the foundation to generate profit and give it back to the foundation, right? With that kind of a endowment structure, we have a longer horizon to incubate and interesting models kind of like to get backed by our capital, right? That kind of again addresses the patient capital part, which Shyam alluded to also. With that kind of a long-term commitment, if one builds a certain platform or institution using technology as a differentiator, some of these blended services solution product can be enabled in the rural segments, and that is exactly what we are kind of like focused also, and some of our investment themes.
So before we go to the round two, there was a thought from the panelists, just if anyone have a quick comment on what we discussed till now, and just to have the audience interaction, we can quickly chip out 5 minutes if you have any quick inputs on what we've discussed till now. Anyone who wants to share their thoughts.
He's testing how many are awake.
That's so mean of doing that. I was just being kind. Yeah, I have seen one hand. Can we have the mic there, please? Sir, can you raise your hand again? I think they're not able to spot you. Yeah.
Not bad. A good strike rate.
Thank you everyone for the fantastic insight, what you have been given in the last 20 minutes. My name is Ravi Ratanpal. So my question to the panelist is, most of the time when we speak about blended finance, it's focused on the rural economy. But why don't we have a structure in place where the MSMEs, which there's a pain point both and from getting the capital, access to capital at a cheaper rate. So why don't we focus more on the blended finance for MSMEs? And we know the kind of contribution it does to the overall economy. If we can throw some light on that, it'd be good. Thank you.
See, MSMEs, 50% of the MSMEs are in rural areas only. So when we say rural areas, so MSMEs, we are not talking only about agriculture. It is whatever enterprises are there in rural areas. And for MSMEs, Government of India has done a lot of things in terms of guarantees and in terms of assurances. So now many banks, they are also coming up with various products. And there has been an effort from the DFIs also, particularly SIDBI, and even NABARD is also into rural MSMEs. And we have a lot of initiatives which I think which we need to highlight very aggressively, to say that there are a lot of efforts which are possible. And MSME is one area where growth is possible. Growth and employment and income is possible for the people. So there are efforts. I mean, it's not that there are no efforts.
Just if I may add to what Dr. Sood mentioned, I guess MSME today has kind of like evolved to become a darling of private investors also, thanks to all the efforts that has gone in the last 10 years from risk capital that I mentioned. But the problem that you alluded to is that there is a high cost of borrowing, right? About 20%, 22%, 24% more you go interior. The problem lies because accessing the customers there and underwriting them is very expensive. And that adds to the OPEX, and higher cost of borrowing resulted in higher, you tend to pass on that kind of a cost to the customer, and hence it is high. Again, more digital infrastructure and print is established for these customer segments, and people who are playing in the MSME credit adapt those technologies smartly to reduce the cost of acquiring these customers and underwriting them. The benefits will accrue. I think it's a matter of time before people get smart and enable the credit or access to credit at a lower cost with efficient use of technology. This will eventually happen. I think it's a cycle. Hopefully, that kind of answers your question as well.
I'll just add last point. Urban MSME is not that different in terms of the benefits they get through the formal lending channels any longer, because they have an established track record, right? I think the beauty of the current credit system, the bureaus and other platforms, transparency and democracy of the process is highlighted to a massive extent. So I think urban, when I say urban, I mean extended urban, not that bad.
Sure. So again, coming back to the panel, and we have 16 more minutes left. I want the organizers to invite me next time. So if I spill over, my chances reduce. So, sir, again, coming back to you, Dr. Sood, as next question on NABARD's shift from traditional grants to catalytic fund, right? That has been a great shift, which is opening new avenues for private sector. But at the same time, we are seeing great deal of investment and capacity building happening at institutions at the grassroots, like SHGs and farmer producer organizations. So in this context, how do you envision aligning grant and financing programs to only not unlock private sector capital, but also to strengthen the last mile delivery of channels of these FPOs, SHGs and others as we go by?
So you said it rightly. So we have also sensed that use of grants in the business as usual model is not that effective. So now we are also channelizing grants more from the perspective of impact. That particularly in high impact sectors like renewable energy, agri-logistics, skilling hubs, the purpose is to maximize the developmental impact and increase the viability. So this is the impact, this is the consideration with which we are now deploying our grants. And earlier we were doing grants mainly for the project interventions. But the pre-project, there are certain pre-project interventions like project preparation, capacity building, FLDGs. So now our grants are aligned to these, to take care of these very, very important, initiatives. And the purpose is that to crowd in commercial capital, because if we invest in providing some kind of guarantee, some kind of capacity building, helping the organizations write their project reports properly. So people who have the private people particularly, they also see some value in this and they feel that there is an opportunity. Blended finance and thematic funds, they provide an opportunity to scale up the partnerships, do I feel. As far as the institutional capacity is concerned, we have been in this field of strengthening the SHGs and FPOs. So there is a 10,000 FPOs program going on by Government of India where we are also partnering. And SHGs we have been doing since 1992 and now it's one of the largest program in the world in terms of the microfinance. So empowering these institutions provide a platform for the private sector to chip in and because this is the last mile delivery where the provision of services is possible. So I think combining the catalytic grants, blended finance platforms and institutional strengthening. So this approach is going to be very, very helpful to ensure that not only that the private investments are attracted, but also that they are gainfully used and employed. So I think that is going to be the approach where combining these approaches is going to be very, very helpful. Thank you.
Thank you, sir. And so shifting the needle from public-private partnerships, which we have been hearing where, say, NABARD and other institutions have been putting in the catalytic fund and the private sector might come in, I would like a shift towards private-private partnership. And we have been hearing and we know CSR funds have been seen as a big catalytic boost to rural economies. But have we utilized them to the level they could have been? I would say no. So how do you see now, maybe another 10 years again with a longer horizon, CSR funds being used as a catalytic fund to further the private sector funding, bringing in that risk capital early on? And of course, it's good to say all these ideas, but there has to be an anchor institution to drive this at a national or a state level. So which institutions do you believe are the ones which can drive this movement ahead? So Shyam, any views on that if you can share?
No, I mentioned right earlier, in banking we used to say, for any problem there's a Rangarajan committee report. Like that, for every requirement of the country, there is already an established entity. If you take at a national level, there is, say, Niti Aayog. So there are different, the architecture has been created. But before that, I just want to say, now the CSR funds at a country level is about $3 billion, 25,000 crores, right? And even at a normal 10-12% profit growth per annum, that's going to keep going to 25-30,000 crores in the next. And if you look at even say 30%, 40% of that were to be the private partnership-led capital, which goes as the first loss guarantee or the support for initiating, you can leverage that 4-5 times. So if you take a $3 billion, 30%, $1 billion, leverage it 4-5 times, you're talking of $5 billion as a potential investment opportunity every year into these kind of initiatives, which comes relatively protected because there is a sort of a guarantee or a subvention, so to say. So I think the scope for formalizing it, and you did mention platform, that's I think the biggest, an entity in Western Maharashtra and an entity in deep interior and Tamil Nadu, both making profits and putting money into CSR, may not have a common platform to leverage and multiply, right? So I think if you believe in the multiplier effect, if you believe in the large corpus that CSR provides, then the platform becomes essential. And I do think there are some examples of it I used to be part of the bank, which initiated a very nice program called Sanjeevani. It was in the area of healthcare, cancer awareness, particularly for women-related problems. In a small sense, that experiment seems to have taken off, and even after I've left the bank, seems to have great legs. They tied up with a large network partner, television media partner. The bank, Federal Bank, put in their coppers. Partners like Tata Trust and other very leading institutions started coming in. So it started gaining momentum because the multiplier effect kicked in. And if you sort of take that as a base case and multiply it across the large corpus that I just mentioned, and assuming $1 put in produces about $4 or $5 of further capital, you're talking of this potentially $5-6 billion per annum, about 40-50,000 crores that can come in towards the various initiatives that we're talking about. So I think this has great promise, great potential. There are established institutions, but like Dr. Sood said, it's really the last mile that the whole story lies, right? And there we talk about state level boards, and now we have the FICCIs and the CIIs and all these very reputed chambers who have really ears on the ground, but often they are advocacy bodies. We have to figure out how those advocacy bodies also becomes last mile execution of players who work at taluk level, or even if there is a division below that, and get things done. I think the value of all that is going to be, as they always say, right? The proof of the pudding is in the execution. So if we can take all these lofty thoughts, there's enough resources, great ideas, executing on the ground using all these local bodies empowered, and obviously transparency and technology are going to be a massive input into this, but I do think the modern day technology allows for these to happen. So I remain very hopeful that this architecture can go to great gains on the ground.
Great. Thank you so much for those inputs. So advocacy to action, last mile institutions, and the numbers really stunned me, 4 to 5 million USD opportunity. So again, building up on the last mile institution, Saravanan, we've been talking about all the macro level challenges, right? But there's a booming rural innovation and entrepreneurial sector, right? There are young people who are solving the challenges that are happening at the ground level for the local economies, right? But we do not see them getting same opportunities at par with their urban counterparts, right? So how can we create, public-private partnerships or sector can contribute to maybe create a great ecosystem of rural startups in India? How can we drive that is a question to you.
No, I am kind of like reminded of one interesting statement made by an entrepreneur in a couple of such events recently. So India is a land of mouth-watering opportunities and eye-watering challenges, right? Right? So when I heard it, I kind of like reflected for a little bit, like what exactly those challenges are, right? Just kind of going back to your question, opportunities in rural economy, if you kind of like just look at sheer population, GDP per capita, or the kind of employment driven economy boom there is massive, right? Everyone kind of like can, without doubt in their mind, underwrite that, right? But how do you underwrite that, and what kind of enablers can be put in place is the biggest question, right? It could be partly government-driven risk initiatives, partly an efficient vehicle to put the CSR capital and other private capital to pool and channelize, these. But, one thing that at least the private equity world has kind of like taught me over the last, 2.5 decades is that everything needs to stand on its own foot with a very strong unit economics on its own merit, right? Initial risk capital from different sources can kind of like come and enable, right? But once it goes in, a long-term path to clear profitability needs to be established on every model that is based, whether it is rural or urban, right? And people who have tasted success, right, by establishing some of the innovative models centered around urban can definitely take that pool of capital to certain rural and tier 3, tier 4 centric economies and channelize that, right? It could be through sort of a founder network, or it could be through some sort of a VC specifically kind of like established to back rural kind of a startups. But I guess unless there is a clear path to a long-term value creation is established purely by backing on ventures or entrepreneurs in that, right, the long-term capital flow will be relatively limited, right? But I guess we are in the journey again. That's what I would kind of like say. 20 years back, people would have kind of like questioned the amount of VC or venture capital flowing into India, for backing interesting startups emerging in say fintech or consumer tech or even drone and other advanced manufacturing startups, right? That phase has evolved over the last 2 decades. Similarly, taking that capital to rural economy and backing some of the interesting ideas that furthers economic boom in those regions will take some time. There has to be some catalyst that needs to be put in place, including government risk capital or pooling some of the low cost private capital, if I may use the term for CSR, right? And channelizing that using a stronger partnership between, say, the entities like this and probably a successful entrepreneur investor network in this part of the world, right? That way, the knowledge and the difficulties that has been faced by this part of the world, the urban kind of a centric models over the last 2 decades need not kind of like go through the cycle in rural when this model kind of like takes off, right? I think it's a combination of risk capital, efficient use of risk capital using partnerships, and then giving that time for these models to evolve in the rural economy and create that value.
Thank you so much. I would have loved to take one more question, but it's just 3 minutes left. So any other concluding thoughts from any of you before I summarize and close the session?
I think one of the challenge that the private capital would find for investment in rural areas is that there's a lack of trust actually. There are lack of standardization. So I think the outcome-based instruments which are now being tested through the social stock exchange, the institution of social stock exchange, that's going to be a very potent platform through which such fundings are possible. And we have seen some light in this. So outcome-based instruments and then pay for results instruments, they are very, very important. And standardization of these, setting proper framework for monitoring, proper data availability to the institution for their visibility is going to be I think one of the very, very important thing which can help drive these investments in rural areas. Thank you.
Thank you. Any other thoughts?
No.
No, great. No, thank you so much. So just to summarize, I think for me the key takeaway is opportunities there in the rural area, and that's where the capital is going to flow. But ROI has to be redefined. As sir also concluded, we have to look beyond just returns on investment, and returns on impact has to be thought through and has to have to be standardized. And a key point that I learned again came up is that last mile institutions, the delivery mechanism has to be more robust. Their capacity has to be built. We have to invest in their digital capacities, their capacities to deliver. And lastly, the point around long-term capital and leveraging CSR capital as maybe the first means to drive risk capital towards building more catalytic funds and blended finance equipment instruments going forward. So these are some of the 4 or 5 points that I could gather. So thank you so much, everyone, for your time. And thanks to the audience to listen to us patiently. And have a good day ahead. Thank you so much.
Thanks all.
Ladies and gentlemen, we can clap louder. It was a very insightful session, and we have had a very prestigious panel doing this. Dr. Sood from NABARD has been very gracious to get mementos for the rest of the panel. I would request him to kindly present that to our panelists and our lovely moderator as well.